Tom Lee himself just suggested that Tesla stock may actually rally off of what could be bad news July 2nd. He actually shared this article from Barron's that says Tesla delivery results are coming, brace for more bad news. Tom Lee says watch for when stocks rise on bad news and tags Tesla. Now there's a couple of different ways that this actually happens, but most importantly and what is most common is the stock's already priced in that bad news already. And I think when you look at Tesla's stock and its performance this year, you've already priced that in. And especially if you're looking at other EV companies, Tesla is a standout, right? A lot of those companies are slowing down investment. Their deliveries are slowing down dramatically. And Tesla's, yes, they're down what could be 10% year over year. It's still a pretty good number, despite the kind of environment that we're in the economy and with rates as high as they are. This article from Barron's says the electric vehicle maker typically reports global quarterly delivery numbers on the second day of a new quarter. For the second quarter, Wall Street expects just under 450,000 units, according to FactSet, about 4% lower compared with the 466,000 units delivered in the second quarter of 2023. The 450,000 figure, however, looks too high. Recent estimates have been closer to 415,000 units. On Sunday, an independent Tesla researcher who tweets under the handle Troy Teslike published his updated second quarter estimate. He is looking for 416,000 cars. The 416,000 figure is down almost 11% year over year, worse than the nearly 9% drop in the first quarter. A faster decline in the second quarter would be a surprise. The first quarter result, with some 387,000 cars sold, missed the lowest Wall Street quarterly estimates and sent Tesla shares lower. But this will be a good quarter over quarter number, and I think that could also play into a potential rally if Tesla does see a rally following July 2nd. If last quarter deliveries were 380 or so thousand and we come in at 420,000 or so, that's going to be some pretty good, almost 10% quarter over quarter growth. And that could be positive for Tesla stock. But I will say it becomes a lot harder for Tesla to meet what Elon said on the last earnings call, where Elon was asked if he believes growth will actually be positive this year for deliveries. And he said yes, right? Current Wall Street estimates are roughly flat for deliveries at about 1.8 million for this year. And that was where we were last year at about 1.8 million as well. So roughly flat as far as expectations. And just to get to that number, you have to see like 500,000+ deliveries over the next 2 quarters. Those are very high expectations as well. So it is possible that earnings estimates do come down a little bit and EPS estimates do come down a little bit as well, as Gary Black wrote in his X post today. And that could also be problematic for Tesla stock. But what we're actually seeing today is option activity that looks very strong from big money into Tesla stock. You have seen 15 different trades totaling $5.89 million with a positive order value of 77%. So if there was all of this fear heading into July 2nd, you would expect to see a little bit more, put positioning into Tesla. And you're not seeing that today. In fact, it's quite the opposite. You're seeing call positioning. You're seeing upside positioning into Tesla. Now, if you take a look at this Friday's expiration, open interest on the call side is sitting at 73.74%. Open interest on the put side of 26.26%. If you take a look at the call side today for this Friday, about 68% of all volume is calls and 32.0% of all volume is puts. So still some pretty solid numbers. If you take a look at next week, the week that we get Tesla's Q2 deliveries, volume today is 69.13% calls and about 31% puts. So that looks good, although the open interest on the call side is 45.37% and open interest on the put side is 54.63%. These are still overall pretty neutral numbers. There's not a big skew in either direction for next week's option expiration in Tesla. Take a look at Tesla's short interest, still sitting at 3.66% short interest of free float, $18.58 billion currently sold short in the stock, and 101.51 million shares that are currently sold short. If you do indeed see Tesla stock rally on bad news, I think that's going to spook a lot of the shorts and potentially cause some shorts to start covering on short positions. In fact, if we take a look at today, there is a decent amount of shorting activity in Tesla. Even though Tesla is in the green, you have covered shares of about 1 million and shares that are sold short of about 4.1 million. So actually over 3 million shares on net today are being sold short, which has put a lot of downside pressure on Tesla stock since you did hit that high of the day earlier in the trading day at about $188 per share. You did find support at this trend line here, which is a great sign, about $183.50 per share. Coming tomorrow, we will have some important data as well to be mindful of. Fed Bowman speaks at 7 o'clock in the morning. The inflation rate year over year comes out and month over month. Your CPI, your headline for Canada at 8:30 in the morning. Canada just started cutting rates about 2 weeks ago for the first time, really leading the Fed and our Jerome Powell, right? They're the first, along with the ECB, to start cutting rates. So that first inflation report might be a little bit more important there. So keep an eye out for that. 8:30 in the morning as well. Tomorrow, you also get Chicago Fed National Activity Index expecting a negative 0.4 number. Last month was a negative 0.23% number. So that's a little bit worse of a number that we're expecting for this month compared to last month. We will get the S&P Case-Shiller home price month over month, expected to rise 1.1%. Last month was 1.6%. And S&P Case-Shiller home price year over year is expected to rise 6.8%. And last month it was 7.4%. Now, you will get the CB consumer confidence. That will be very important because you're already in pretty recessionary numbers already. So if it gets worse as it's expected to, then that's going to look even worse. Last month was 102. You're expecting a number around 99. So as the markets continue to rally, continue to sit near all-time highs, under the surface, people are not that confident. It does not look good. You will get Richmond Fed Manufacturing Index expecting a number of 3, which is better than last month's 0. So actually expecting things will get better there. Manufacturing shipments expected to be 13, same as last month. Richmond Fed Services Index is expected to slow a little bit from 3 last month down to 2, so that would be good. Dallas Fed Services Index expected to come in at negative 10. Last month was negative 12.1. Dallas Fed Services revenues expected to come in at 8. Last month they were 6.7. And then you will get Fed Cook that speaks around noon, Fed Bowman that speaks at 2:10 tomorrow. And that's pretty much it. So some important data, some data that can be important, like this Dallas and Richmond Fed data. CB consumer confidence is probably the biggest data point tomorrow, as well as the Chicago Fed National Activity Index. Both of these two are probably what is going to drive the markets, as well as the Canadian inflation rate. If that's low, that's good. If it's high, that's bad. We have such a symbolic relationship with Canada, biggest trade partner, so on and so forth, do a lot of business with Canada. Whatever their inflation numbers are, that could be a sign, precursor to what ours could look like here in the US. Here, like I said, that CB consumer confidence number that we get tomorrow will be very interesting. The leading economic index is now at negative 14.7, which is only consistent with recessions looking back at history. So if that number comes out bad as well, then that's just going to be setting an even worse precedence than where we're already at. And it's pretty strange that markets are still at all-time highs, yet there's so many data points suggesting to a slowdown, a recession that could be coming. Elon Musk dropped some pretty big new information, I would say, on this X post. He says long-term returns on Tesla will, I believe, be exceptional. As you guys know, today Nvidia was a weak part of our markets, down over 5%. This comes after Nvidia insiders have already cashed out almost $800 million worth of Nvidia this year and have already sold about $400 million worth of Nvidia just in the last month or so. That was kind of your little heads up of some selling, some pain that we could see in Nvidia. Now, following that, you also have Mark Zuckerberg that just sold $12.1 million of Meta shares. He's now sold $54 million worth in the last 10 days. I guess after all, if you have a $400 million Hawaiian underground doomsday bunker to build, then you probably need to sell some Meta stock. So doesn't necessarily mean Meta's doing poorly, but it could be an anecdotal sign that there's a little bit more fear, concern out there that stocks could go back through another deeper, longer lasting slump. Now, again, just to focus back on Tesla for a minute, I do think Tesla's kind of subject to what the overall markets do, meaning that I'm not really expecting much until July 2nd at the bare minimum. So really this week and the first day of next week, if I do have my dates correctly. Coming until next Tuesday, I think Tesla's just going to do what the broader markets do. Now, today you are seeing some rotation, again, out of Nvidia into some of your Dow names, some of your Russell names. There is a little bit of a rotation definitely happening today. And overall, with Nvidia down 5% and markets not down much at all, the S&P 500 only down about 0.1%. That's actually a pretty good day for markets. That's actually showing a lot of strength to me. The NASDAQ is not doing nearly as well because the weighting is larger in the NASDAQ than the S&P with Nvidia. But still, that's a pretty good sign overall. And for my pretty defensive take right now, that's kind of making me reconsider a little bit. Maybe we could just go through a rotation. It's ultimately going to come down to the data and what the data says about the economy. So I think it's too early to really draw any definitive conclusions on what's coming next in markets, but I do still have a downside bias in markets when the participation has been so low and expectations are so high, especially heading into earnings season. Now, again, you do have FedEx that reports earnings tomorrow and after hours. You have Micron that reports earnings tomorrow and after hours. They do a lot of business directly with Nvidia, so they will be super, super important for the overall AI trade. And then on Thursday, you do have Nike that reports earnings in after hours, which will also be important for the overall markets and that consumer discretionary trade. But as Tom Lee said here, I do think it's very possible that Tesla could actually rally on a bad delivery number. Just a number coming in better than last quarter would show month over month growth, even though year over year is kind of what people look at. I mean, if you think about CPI, nobody really cares about year over year. It's all about month over month. So if you're looking at Tesla from that shorter term perspective, that month over month growth, let's call it 10%, could be a good sign, and it might hold up maybe your earnings EPS estimates a little bit better, and maybe full year delivery estimates. Well, I think those could get a little interesting, because I mean that would just mean that Tesla would have to put up some really strong quarters over the next rest of this year to come in with a positive year-over-year growth rate. I do think 2025 is set up in a very good way as far as deliveries and EPS. The year-over-year growth rates there should be very impressive. So just my thoughts. Again, if we break out above 188 this week, that'll be great. Not really gonna count on that just based on the data that we have and what we're expecting, but it is possible. That would be fantastic. Also, a breakdown to that 100-day to 20-day moving average would also be more of a base case scenario that I would expect this week, down to about 180, which would really only take about $3.60 or so off of Tesla's stock right now. You're holding above this trend line, and you did today. That was fantastic. That's exactly what you wanted to see if you are in the bull camp. But I think we're just subject to the data and what happens in broader markets throughout the rest of this week. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.